Hey guys, welcome back. Hope you all are doing well with your studies and with your preparation. In this particular video, we are going to talk about national income, and again, a very important topic from economics. With this particular topic, we will understand the different terms which are associated with national income, like the basic introduction, what is national income and all, and how basically we measure national income and the different methods of calculating national income. Then we have number of factors like gross domestic product, GDP, GNP, NNP, per capita income, disposable income, real income, nominal income. So there are so many terms which are generally associated with this particular chapter. I'll try to explain these particular topic with certain examples as well. Okay. The only request is if you face any problem with any term, and if you did not get that particular term, please do mention in comment section. And another one is, if you're new to my channel, please do subscribe, and if you like the video, please do share with your friends. Okay, so now we will start with the introduction part. What is national income, and basically what are the areas, or what is the basic meaning and definition of this one. Okay, so whenever we talk about national income, it is the nation's income. And if you talk about any nation, it is like, if you talk about India, we have number of state and union territories. If you talk about a state, it is combination of number of district. District are like, we have different segments in district. Then if you talk about the smallest unit of a society, that is a family. Okay, so every family, they have two or more members. Okay, so now every members who contribute something, or even who earn something, who do some activities and all, who give some output. So if you add these particular things, so that if you add families contribution, if you add district contribution, state contributions, so if you sum that particular value, that is basic your national income, right? So here, basically, if you talk about national income in economics, it is the total money value of all final goods and services produced in an economy during a financial year. Let's say let's say if you are running a manufacturing company for this particular markers, and you produce 100 markers, and the price for one marker is 10 rupees. So 1000 rupees will be contributed in the national income when we calculate this one. Let's say I deliver 1000 classes in a financial year, or in a given time duration, and one class is costing 500 rupees. So the outcome is your national income. So we have three major sectors of economy which we earlier discussed. Like, we have primary sector, which generally deal with agriculture and allied activities. We have secondary, which is manufacturing, and we have tertiary, which is service sector. And there are so many subsectors, like in service sector, like we have banking, we have insurance, we have education, hospitality, and others. Okay, so whatever the outcome they are giving, basically, and their sum is or whatever the outcome of that particular given time duration or financial year, so that is a national income for that particular economy. So national income is the money value of all final goods and services produced in an economy during a financial year. Okay, now why we use this term final? So basically, when you study goods, so we have two type of goods. One is final goods. Final goods are those goods which are ready to use, ready to consume. Okay, so like this marker is ready to use, so this is a final good. Okay, the plastic for this particular marker, the ink, so that is an intermediate, that is a raw material, so that is intermediate good. So another type is intermediate good. Intermediate good are those goods which generally face further production process, which are generally part of some process. Okay, so that is your intermediate good. Like, let's say that coffee beans are intermediate goods for a restaurant, because we will use them, will process them, then will serve as a cup of coffee, that is a final good. Okay, after some additions like milk, sugar, and others. So final good, which are ready to use or ready to consume. Intermediate goods, which generally face further production process. Okay, so in a financial year, between or in a given time duration, whatever final goods and services we are manufacturing, we are providing, that is generally part of your, or the sum of these particular is generally known as your national income. Hope this is clear to each and everyone. Now, whenever we measure national income, so basically we use different methods so we can get accurate data. Okay, so like we use production method. As I earlier told you, production is flow of final goods and services, like how many markers we manufacture, how many classes we deliver, how many laptops we manufacture, how many cars we manufacture in a year. Second one is income method. If you talk about income, so we have sources of income, or you can also say that is also known as factor income. Okay, whenever you study economics and whenever you talk about factor income or sources of income, so we have four sources. These are land, labor, capital, and entrepreneur. Okay, now if you see the outcome of or the income of these four sources, so we have first one is land. From land we get rent. Okay, so land we get rent. Labor, so labor, those who get income. Okay, salary, wages. Third one is if you talk about capital, whenever we invest some capital we get interest. Okay, and fourth one is entrepreneurs, those who take risk, so they earn profit. Okay, profit, so that is their income side. So if you combine all these four, then your part will be your income method. Final one is expenditure. This is just opposite of your income. So in expenditure, basically we have public expenditure made by government, and we have private expenditure made by the private individuals. Okay, and apart from this, with this we do have some adjustments. Okay, whenever we'll come to the calculation part, so you will find NIA, that is net income from abroad. So NIA is net income from abroad. Okay, there are number of Indians, those who generally living in foreign countries, they are denoted through and then we have M. There are a number of foreigners, those who generally working in India. So we have to adjust that particular one. And apart from this, we have net exports, export minus import. What, like we are doing some export, we are importing some things, so that adjustment as well. Okay, so we'll talk about these particular one. So first we'll start with production method. I hope now you get an idea about this one. So in this particular method, national income is measured as a flow of final goods and services. So in a given time duration or in a financial year, how many final goods and services we are producing. As I earlier gave you an example of mobile phones. How many mobile phones we manufacture in our country? How many markers we are manufactured? How many hospital services, banking services, insurance services, classes we deliver in a financial year? So the overall, the sum of these particular one, when you use this way, so that is your production method. Income, as I earlier told you, it is a flow of factor income. So factor income means sources of income. And whenever you study economics, so whenever you talk about sources income, you have four sources. One is land. So land is basically land, labor, capital, and entrepreneurs. So from land we generally get rent. Okay, so land get, the income side is, we are talking about income, so we get rent. If you talk about the labor, so we get wages or salaries. Capital, we get interest, and entrepreneurs, they generally get profit. So if you sum these particular one, or the outcome will be your income method. Okay, so again, very interesting one, and please do remember the outcome of all these four. Next one is expenditure method. So expenditure method, here basically it is based on the flow of expenditure. So you can say this is just opposite of your income. So in income method we are considering the income part. So now in expenditure method, it is we are considering or we are taking in account for the expenditure. Let's say if someone is getting rent, so someone is paying for it. Okay, if I'm getting salary, so someone is paying for that particular salary. Okay, so for me it is income, for that XYZ company it is expenditure. If someone is getting interest, so someone is paying for it. If someone is earning profit, then the other part is generally paying for this. Okay, so these expenditure we generally further categorize into public means government, so government expenditure, and private means the expenditure made by the individual. So hope these particular things are clear to each and everyone. So now we use all three concepts to calculate national income, so we can find more accuracy in our calculations. Okay, now whenever you calculate national income, so you generally follow a flow chart. Okay, so first we generally calculate GDP, gross domestic product. So after GDP, gross domestic product, we'll study these particular thing one by one. Then you calculate your GNP, gross national product, or even you can also calculate NDP, net domestic product as well, right? So that is GDP minus depreciation, outcome is NDP. Then you have NNP, net national product, the pure income of that particular economy. Okay, after all adjustment, we have personal income, individual income, we have disposable income. I hope you guys heard about the disposable income. So it is like when you minus indirect taxes, so that is part, when you minus taxes, so that is part of your disposable income. So here we will start with GDP, gross domestic product. So the definition is same, but with slight we have a small change in the definition. Okay, so that it, like GDP is, whenever you study GDP, so GDP is the money value of all final goods and services produced within the geographical area of a country during a financial year. Okay, so gross domestic product is a sum of all final goods and services produced within the geographical boundary of a country. Like let's say this is the geographical boundary of India, and we produce, like we have two producers, one is domestic, okay, and we have another one is foreigners. So let's say domestic produce 100 crore rupees, and foreigners, they produce 10 crore rupees. Okay, so your GDP size in this particular case will be 110 crore rupees. Now there is a case, some Indians, those who are generally living in foreign countries, they also produce 20 crore rupees, but we will not add 20 crore rupees in case of GDP. So GDP is all about these boundaries, these geographical area. So within that particular geographical area, whatever the production of final goods and services we are doing, so that will be part of your GDP, gross domestic product. Just go for the definition, you'll find it. GDP is the total money value of all final goods which are ready to use, ready to consume, goods and services produced within the geographical boundary of a country during a financial year. It can be manufactured by Indians or domestic players, it can be manufactured by foreigners. But Indians, those who are living in some other countries, they are also doing some productivity that is not part of your GDP, right? So hope this is clear to each and everyone. I'll show you the formula, so that will give you the better clarity how to calculate or how to estimate or how to basically calculate, do the calculation of this GDP. So we have GDP formula through expenditure method. The formula is C plus I plus G plus NX. Okay, so here if you talk about the C, that is the overall consumption income, and the gross and the NX. Okay, so total, if you go for the income, so that is total national income plus sale tax plus depreciation plus net foreign factors. And if you go for the value added approach, GVA, that is gross value output minus value of intermediate consumptions. So we generally use different approach. You can go for the income method, you can go for the production method, you can go for the expenditure method, and we use, if you just put those values, so you can easily find out your GDP as well. Okay, so now GDP is clear. If GDP is clear, you can easily understand GNP, NNP and other. Okay, so first one thing that is missing, I'll let you know about the another one, that is NDP. Sometime NDP there is a confusion. Net domestic product. Okay, so what is net domestic product? NDP equal to GDP minus depreciation. Please do remember this one. Okay, so now you know the GDP. If you know GDP, you know everything. Okay, so GDP is total money value of all final goods and services produced within the geographical boundaries. So this is the geographical boundaries, and the manufacturing or the services, then the final goods of services and final outcome of final goods and services, that is GDP. If you minus depreciation, now what is depreciation? Depreciation is like the reduction of value. It is generally calculated on we can say investment, the manufacturing goods. Okay, let's say I'll make it simple. Let's say you buy one laptop today, and the laptop that cost you 50,000. After 1 year, if you see the value of this laptop is, that is due to uses, it become 40,000. So the value of laptop that generally decreased by 10,000. So this 10,000 is your depreciation. So depreciation that always calculated on capital goods. Okay, so you buy some machinery, you install some machinery. So after, due to tear and wear causes, the value of that machinery decreased by certain percentage. Okay, so that amount, if you adjust that particular amount from GDP, so your outcome will be NDP. Hope this is clear to each and everyone. Okay, now next one you have GNP. Similarly, if you talk about the GNP, gross national product, so here we have some adjustment of like GDP plus minus, it can be, usually it is plus in case of India, NIA, net income from abroad. Okay, so if you calculate GNP, so GNP equal to GDP, you know, this is your GDP. Okay, so I'll give you cases as well. Okay, so plus NIA. Okay, so net income from abroad. So GNP equal to GDP plus NIA. NIA is net income from abroad, X minus M. It is also denoted as X minus M. So X are basically Indians, those who living in foreign countries. They're doing business, they're doing job and all, and they send some money to India. Let's say the X value is 20 crores and the M value is 10 crore. Okay, so your NIA in this particular case is, if you talk about your NIA, so your NIA is 10 crore rupees. Now how you will calculate GDP for this particular year? Suppose that your GDP value was 100 crore rupees. So 120 crore rupees, we calculated it earlier. 110 crore rupees, sorry, we calculated it earlier. So how we calculated? Indians in India, they contributed 100 crores. Okay, so Indians in India, they contributed 100 crore. Foreigners in India, they contributed 10 crore rupees. So your GDP is 110 crore rupees. For Indian NRIs, those who generally living in foreign countries, they earn, suppose that they earn they earn 20 crore rupees, and depreciation was 5 crore rupees. So if you'll calculate NDP, so what will be your outcome? Net domestic product will be GDP 110 crore minus depreciation, that is 5 crore. So your NDP will be 105 crore. If you calculate GNP, gross national product, so what will be your outcome? So your GDP is 110 crores, right? And plus your NIA is 10 crore. Okay, so in this particular case, if you go, your GNP will be 120 crore rupees. So this is very simple. Hope you get this particular one. The only thing is you need to understand GDP. So if you understand GDP, gross domestic product, it is very easy to understand net income from abroad, or the basic calculation as well. Okay, you'll like, if examiner asks you question based on the like if they ask question based on the different areas, like we have, let's say they if they gave you the numbers about the depreciations, if they gave you the numbers about the NIA and also, you can easily calculate these particular number, right? Chalo. So next we will talk about the NNP. Again, very simple to understand. Now we earlier calculated, do remember those datas, GDP, so 110 crore rupees. Then we have GNP. Now we'll not talk about the NDP. GNP equal to, what was your GNP? So our GNP was 120 crore rupees. 120 crore rupees. And our depreciation, we assume for the given time duration, it was 5 crore rupees. Now NNP, net national product, so the pure income of that particular country for given time duration is, so GNP is your 120 crores. Okay, so GDP plus NIA, and your depreciation is 5 crore rupees. So your outcome, that is 115 crore, is your NNP, or you can say pure income for the given time duration. Hope you get this particular thing clearly, guys. Everybody, if you have any question based on this, please do mention in comment section. So whenever you calculate national income, you generally follow this particular one. Okay, so NNP is further defined as, it is calculated by deducting depreciation from gross national product, GNP. So this is the formula. You can calculate it on the basis of factor cost, or even not only GNP or NNP or you can also calculate GDP. So whenever you calculate GDP, you may calculate on factor cost or market price. Factor cost of production, simple. Factor cost of production, and market prices after addition of some taxes and other costs. Okay, so like whenever you see data related to GDP, you will find GDP or NNP, you will find GDP at factor cost, or GDP at market price. So when they mentioning factor cost, which means they are doing calculation on the basis of cost of production, or cost of production of that particular goods and services. And if you talk about the market price, calculating market price with added indirect taxes and deduct subsidies by the government in the factor cost, right? So hope this is clear to each and everyone. Now, like here you have the formula as well. So market price equal to factor cost plus indirect taxes minus subsidy. So with this, you'll get your like if you calculate GDP or NNP, you can calculate GDP at factor cost, you can calculate GDP at market price, or even similarly you can do calculations for NNP at market price as well as the factor cost. Okay, now disposable personal income. Sometime I hope you guys heard about this particular one, key what is your disposable income. So what is the disposable income for that particular XYZ corporate house. So when you minus direct taxes from that particular amount, let's say my salary package, suppose that is 15 lakh, and my tax liabilities are suppose that 3 lakh. So the outcome, that is 12 lakh, is my disposable income. Very simple, right? So there is a person whose annual income is 15 lakh, and out of this 15 lakh he has to pay 3 lakh rupees taxes. Okay, so if you minus taxes from your income, so that outcome is known as your disposable income. So income available to individual after deducting direct taxes. Disposable personal income equal to personal income, that is 15 lakh minus direct taxes, income tax, that is 3%, sorry, that is 3 lakh. So the disposable income is 12 lakh rupees. Okay, hope this is clear. Very simple one. Next one, we have personal income. So if you see the personal income, just jump to the formula, you will get an idea. So personal income, that is national income plus transfer of payment. Now what is transfer of payment? I'll let you know about the transfer of payment. So transfer of payment is basically here it is also explained, so you can go for this one, like old age pension, unemployment compensation and all. Okay, so which is generally provided by the governments or the organizations. So payments that are not against the productive work. Let's say there is a pension plan which is run by government. Okay, So if you calculating the personal income of that particular country, so like let's say government allocated 15,000 crore for the pension plan to the senior citizen. So we are paying this 15,000 crore to senior citizens. From there will be no activity, there will be no output. We are spending this money with no output. Okay, so old age pension, unemployment. Let's say during COVID, government of India, they came with some scheme where they are giving money to people, those who are unemployed. So there is no contribution in economy, but there is a spending. So national income plus transfer payment minus undisclosed profit of corporate houses plus payment for social security provisions. Now social security pay, like undisclosed profit of corporate houses, they did some illegal thing in the market, they hide something. And if you talk about social security, payment made by employee towards PF contribution, EPF, insurance and all, so that is social security provisions. So the outcome for if you add these particular thing, the outcome is your personal income. Okay, now next one guys, real income and nominal income. So many times students, they generally get confused between real versus nominal. Okay, so whenever you talk about real and nominal is basically, we can say it is current prices. If you remember, I already discussed this thing in your inflation topic. So nominal is current, and if you minus inflation from current prices or market prices. Okay, so let's say, I'll give you an example. Let's say you invested 100 rupees at the rate of 7% per annum for a year. So after 1 year, your money grows to it grows to 107 rupees. But this is the basic concept. This is 107 or 7 rupees is your nominal income. But during the same period, inflation also goes up. Inflation also, there was an inflation, and the average inflation, let's say it was suppose that 4.50%. So during this particular period, the on an average inflation was 4.50%. That means if inflation grow by 4.5%, which means the value of currency will decrease by 4.5%. Hope you remember the concept. Inflation is increase in prices of general goods and services, and the outcome is as inflation grow, every rupee you own by a smaller percentage. So if inflation grow by this percentage, which means the value of domestic currency will decrease by this. Okay, so when you calculate your real income, so the formula is the interest rate minus inflation. So your interest rate is 7% and inflation is 4.50%. So the outcome is 2.50%. So this was your real income for this particular case. Okay, so the real income from this particular investment that investor earned, that was 2.50%. So if the base year price for calculating national income, this is called real income. So we generally use base price and we generally adjust. Like this is the case of real income. So real GDP and nominal GDP. So if you are using current market price, like let's say the current market price of this market is 100 rupees, but we generally do calculation based on base year, that is 11-12. So in 11-12, that was, let's say the market price was 70 rupees. So you have to calculate on the basis of 70 rupees. So whenever we do calculation on market prices, so that is your nominal. When you adjust the inflation things, that is your real income. If we use particular year current market price, that is nominal. So current market is nominal and base year prices or inflation adjusted is your real income, right? So hope with this example you get an idea about the real versus nominal as well. Correct? So guys, in this particular video, we generally talk about the basic things or the basic terms which are generally associated with national income. So again, I would say whenever you study the economics, so national income is one of the most important topic, because like even if you are preparing for RBI grade B or some examinations like JIB, CIB, so here that advanced estimations report presented by NSO, that is very important for your examination. So whenever NSO came with that particular report, please go through that particular report. They generally give you the estimations or the sector wise growth or the expected numbers for the years. Okay, so these are very important one. Okay, so guys, I just try to make your concept toward the national income. Hope you get these particular things clearly. Still, if you have any query, any doubts related to any points, just feel free to ask. Do mention in comment section. And the only request is, if you like the video, please do share with your friends and do subscribe my channel. Okay, and if you, let's say, if you have any like if you have confusion about any topic, to mention, I'll come with some videos, so that will help you in your upcoming examination as well. Okay, so this is it for this particular video. I'll see you soon with some new content. Bye bye, take care all, thank you.